Nice. Okay, so yeah, this is the new indices page. We had a couple of like new additions to it that essentially like make it easier to know when to like kind of take action and also like just compare to historicals as well. Um, it's like obviously on the standard like top part you've got like your gex, dex, like where's total positioning at that particular moment in time. Net dex as well, where Varna is. Obviously, you've also got the numbers to refer to in the training cheat sheet in Discord. Um, Charm levels, the expected move. Just FYI for new people, that this isn't saying we're expected to move up 2%. This is just saying that there's a 2% range for today. Like that could be from low to high. So we could go down like 1.5% and only up 0.5, right? That's still a 2% move. Vex skew, which is obviously like not to be confused with skew itself, which is like our way of determining whether puts and calls are expensive, and like using our looking at our data and like comparisons, what we know is that minus 50 is when puts are definitely too expensive and overstretched, and plus 50 as a rule is when they're too calls are too expensive and overstretched. So you should look to take the reverse. Um, cool. And then what we've got over here, oh, it's a bit laggy, is the stock chart. So this is just for ES at the moment. I'm adding a drop down that will let you look at NQ and Rusty as well. Just to note that this is not a live futures feed just yet, but will be soon. We're just sorting that out at the moment and then getting that all plugged in. But what you've got over here is a couple of things. So if you like hover over each section, you can see like what the high was, what the low was, close, open, so on. And then you've also got like the moving averages like 7, 14, 20 and 50 on the 7 minute candle, because that's what we focus on. You've then got the volas below, which are all aggregated here. You then also have skew, and you can see that again like at the top. Like, you can see what skew is at that particular moment in time. It will refresh itself, so you don't need to do anything. Net positioning is also there too, and then obviously like you've got your volume below as well. And we do have pre-market. It's about to be added, so just noting that. So like how do you use it? So we all know like what the volas are for a lot of you guys, but for the newer people, the volas are listed here, and this is like our TensorFlow based model, which is more effective than the stuff that you've got on TradingView. But obviously TradingView is running live non-stop, so there's an added benefit to having it on TV as well, just like a more simple version. Now what these like lines are kind of like showing you is essentially a when, well, you don't even need to like understand what's going on the input side, but what you do need to understand like how to use it. So when you get a major divergence, like the blue line, which is the VVS, it's like the shorter term one, versus the VVM, VVH, which should always relatively like be flat. That's when you get good action. When it's below, then you'll get a sell. So if you note over here, like we had this push up, volas like really diverged over here, and then that's when we started selling. We actually had we had the move down, right? And then in reverse, if you're looking for like a bid, as an example, a way to do that is like when you see that they are diverging above the rest. So like this one wasn't like as major. I can find one that had a better signal over here. So like here's an example, right? This blue line here really started to like pick up into this downtrend, and then it went over. You then also had like the confluence of like this major peak level here at 3968 also being present. So 3968 being a major negative level was like in confluence with this area. Volas are signaling buy. You've got another thing that we also look out for, which is like net positioning, but net positioning was like relatively flat, so they hadn't like started to like lift this up just yet. Like as you can kind of see, right? Like it was flat this entire time, so we stayed relatively like range bound during this period, but there's a fair few points to be made there. I mean, like 3968 to around 3978 um, is a pretty quick bounce. Um, so just worth noting that. Um, and then you've also got skew. So is skew majorly negative? And it was. Like this is an aggregation of like all the indices, so it's less sensitive versus others. But if we flip over to the same time here at like, what was it, 10? Well, this was 11 o'clock where we had made another low. You can see over here, skew had like really like blasted down on the Qs, so we had this major negative in terms of skew at that time, the exact same time, right? And then it lifted up. Like as it started lifting up and getting out of this negative positioning, that's when you started to see like a bit of a bounce. So it's just telling you like straight away, like the demand isn't there anymore. They're no longer as expensive. Well, obviously that is like then another indication of like people who are in puts are starting to unwind those positions, right? But that wasn't for everyone, was it? Like for SPY and Rusty, it stayed the same. So this is why like having this version here is also handy, because it gives you an idea of like where over like the overall market is kind of going. So like yeah, we got a bounce, but then we still just like trapped right back down again.
I think you're breaking up. Like we can't hear you.
Oh, can you not hear me? One sec. Can you hear me now? No?
That's better.
Right. Cool. Alright, so yeah, anyway, as I was saying, when you have like a combination of the two together, you have skew and net positioning kind of signaling the same thing. That's when you like can have a bit more conviction in a long. So like here's the example right here when actual skew really started to like pick up, right? Just over here. We're also at a major peak negative level rather. We had a look below, went down to like 3953, and then from there the trend completely reversed. We were no longer in like a downtrend. For the better half of like the next 4 hours, we just continually trended higher, right? There was some additional like negative positioning like creeping in again, like it got flat here, it didn't quite go positive, but then you did, so that gave you an idea of like, oh okay, are people like still getting completely negative or not? And then you did are they like, is there demand, sorry, for like more positive positioning or not? And then eventually what we then saw was like an increase of skew like right over here, right? It went to like another peak at this particular point, and that's when like this trend of like pushing up then kind of like capped our range. It also lined up nicely with another peak positive level, and then we started to draw down again. So that's how you like kind of like use the two together. Just like throw in another example as well on the indices page.
It was really hard on Friday because it was such a shitty day of trading.
Yeah.
That usually this would be much more defined.
Yeah. So like this was the 17th, as an example. Like here's another day on the 15th where we were headed down the entire day, like from the open, and then we got to around like lunch hour, right? That's where the selling like really started to kick in. Like notice this, right? Like as we're dumping, like in this little section, positioning was doing the opposite. So positioning was actually going up this during this downturn. So then like that then accelerated, at which point then it's like, okay, fine, we broke through this level, cut off here. Then we have another major peak level, which is significant because it's got a major like definition to it, right? We know it's a major level. We get to this point. When we got to this point over here, it's like, okay, yeah, here's a decent spot to like really like dial in. You can also then see skew started to pick up, and when skew picked up, that trend up basically began to cap again, right? So like this bit here, like overall skew went pretty positive. And then if I'm gonna flip down and go to the 15th to highlight it. So this was skew at the open as well, like when we were going into that sell mode, right? It was positive across the board, not quite the plus 50, but you could see that like calls were more expensive than puts, just not blown out the same way. You also had at the same time on this November 15th, if you wanted to like separate the lot together, you can see net positioning just fall off a cliff. So people who were in calls and so on like really started to do the opposite. So that was another tell. Another tell over here was this 15 section. So it's a bit messy, but you have positive positioning over here, and then you also got like the negative positioning over here, which was near a low. I need to add some log scale to this to make it easier to read. One sec.
So all the levels that are color coded on these charts, are they on the top graph too?
Yeah, they're all on the top graph too as well. Yeah. So you don't need to. Let me zoom in on this a little bit. Right, yeah, there you go. So as we got over to that section, let me bring it up.
Gracias.
Right, I don't know who.
Gracias.
I need to mute this person.
Vengo por la posición de esta tarjeta. Esta ya no sirve. La pedí.
Sorry, I had to mute you. Risky. Okay, yeah. So, like, basically, as we were reaching this position as well, like, we were hitting near a major peak level too, and then you've got that confluence, like, all combined together at the same exact time. To then figure out, okay, right, like, I should be taking the opposite. Like, positioning as of yesterday was all like fairly flat, but then at the open basically went straight down, like right at the open. So like overall people weren't trying to buy this or like get in more calls, like they were doing the opposite, right? So combining that all together, you just then get an idea of like where direction's going. I think another way to also like look at it is also using the deltas if you want, just like add extra confluence, but generally I don't add that until like I see a major extreme. So it's in the trading cheat sheet as well, so if you forget the numbers it's fine, but when you get like a 40 billion delta and a 20 plus billion delta on the Qs, that's when you know like things are overstretched, and we were right on the money for both of them. And you can check the numbers out on trading cheat sheet, like I listed that way before this day even happened. So using those like rules of thumb like can get you out of a mess when things are looking like they're about to just like explode, because that was literally a day where people were like, oh yeah, we're gonna go so much higher, and we just did the opposite. Yeah, so that's like a brief intro into the indices page. Really simple stuff. A lot of the time you don't need to do much beyond like even just looking at this individual chart, but you've also got the ones below if you wanted to look at them. Obviously purple is negative positioning, gold is positive positioning. The darker the color, the more prominent the level is. These janky prints that you see over here, which won't appear on futures, are basically what we call like phantom or ghost prints, and what we find is that they're fairly indicative of like where we may end up. So like when you've just got like a single print, it's pretty handy to like know where they're popping up. Yeah, I guess that kind of like covers that piece in terms of like skew and net positioning. But one of the other ones again is like using the volors to combine with them all together. So one thing you've got over here is like this combination of deep protracted low on the volors, and we just trend it down. And then the opposite here, where you've had like a pretty big divergence in the volors, right? So they flatlined over here. At the moment they flatlined, we got a bit of a bounce. We then continued lower after, so you could have taken your points there, waited, get another peak position rather, and even closer to a peak negative position, and then reconsider another long, as an example. And then also kind of what you want to see is like this net positioning really start to pick up, and also the skew not be as flat. Like if this gets blown out, then it makes it even easier to long, which didn't happen here, so your factors kind of didn't like all line up. I think this was also PPI day, I think, right? This wasn't PPI day, was it? No, it wasn't. That was last week. Cool. All right. Then the other page I wanted to look at was the model. So there's a couple of things like combining it all together, and using this in conjunction with what we do have in the Discord together. Whilst they're like currently like separated, but just in the meantime. So like a really easy way of like looking at the two, and like just separating out all the stuff that's in here. I mean, like we made this more stringent, so you shouldn't have to do that as much, but let's say you had like a whole bunch of tickers that you wanted to like look at that were all saying short or long or whatever, right? Now, what you can do is like take a look at the positioning in this table, where we basically break down all the sectors. So you have the sectors page, but then you've also got this table which I post every day, and this table effectively like shows you where positioning has gone for said sector. So let me give an example of like where it's worked pretty well. Well, this was semis. Was semis here? No, this was a couple of days ago. Yeah. All right. So semis had this extreme negative positioning just before Nvidia earnings, right? So Nvidia earnings weren't actually all that bad, but overall positioning just like had a major deleveraging. Like you can look at the 5 gamma percentage change, which is the 5-day, 10-day, and then 30 and 60-day, right? And the change in positioning was so much more aggressive, like in comparison. To then give context to like how big the move is then you can look at like the next day as an example, or since then what I've also done is I've posted like sigma moves, which is telling you like how large a standard deviation a move was, and that will give you like historical reference as well. So like if it's a -3 or a -2, then it's a pretty big negative outlier, and then if it's a +2 or +3, then it's a positive outlier, right? And you can just line that up in conjunction to like where price is going, sort of things. Like, for example, like let's say you've got a 1 sigma move that is extremely positive. And let me find an example for this. So, ARC and memes had major positive positioning, and that's not in sigma. So let me keep looking. Oh yeah, here's a good one. So memes had like an extremely like outstretched positioning change, right? And then when you look at memes on the same day, they just moved up, right? So there was a lot of positive volume in those names as a result. One of the other ones that we had, this was before, let me go up. Just trying to find that. Oh yeah, so we saw this like this negative positioning change happen in EVs a couple days like prior to them kind of like stalling out, and then what we just like looked at market maker model, and then you can kind of see like, okay, and this isn't even in percentage change, like I didn't times by 100, so that's like 135 or 13,500 decrease rather, right? So that huge change in positioning was kind of a clue, like, okay, there's an issue here type thing. People like deleveraging, prices going up, so there's more than just profit taking now, like they're probably like just taking out of their positions. And then if you look at Rivian, which was our selected choice, that's now down 10% from the same day. So not from the same day, sorry, but from a couple of days after. So what we're on what's the date today? The 19th. It's sort of like stalled out at the top, and then now like completely cratered, whilst the market hasn't really like done all too much. So that gives you an idea of like just uncorrelated returns, like where moves that are happening outside of like what is going on really like in the market type thing. Another thing that also happened at a similar time was crypto memes and high beta went up, and I think Eamon, you took some crypto longs at that point as well, right? If I remember correctly.
Took them early.
Yeah. And then crypto like had a bit of a run ahead of time, and then eventually like reversed over, right?
Yep.
So that's basically like how you can use this stuff to then identify positions that you want to take ahead of time, and just take advantage of like these little pops that are happening. It's like it's more of a stock pickers market than it is anything else. It's like, for example, right, so crypto had that positioning. This was around like peak hysteria, like the SBF stuff had all like broken out and whatnot, and so on. We had a move from like 45 to just shy of 60 on Coinbase, so it's a $15 move. And like if you can get in and out like fairly quickly, and it's like a decent solid return. Um, yeah, and then the same with
What was that?
coin. Coin went up like $15.
Oh, after the hysteria, yeah.
Yeah. And then like soon after, basically like created again, but that was another one. And then let me find China Tech was in here somewhere. No, it wasn't. It must have done that before. So anyway, using those positions in combination, you can then go to the market maker model, and then start to like figure out, okay, I've got a view of like all the sectors, like where is like relative strength, basically, like where is like a lot of positioning going, like where is it aggregating? Are people getting long tech? And if they are getting long tech, like what's price doing right now? Is that relatively weak? Is it strong? Like is it in a downturn? They can like give you an idea of like when people are starting to like accumulate or not type thing, and then you can also just combine that with the sigma moves to then identify like, okay, this is an area that is relevant type thing. I think another one which is a good example was XLE. Or is it no? Crypto was another good example, but I use it for the long side, but and it also had like a narrative, so it's probably not ideal, an ideal case. But here's a good example. So volatility was one. We like had like a crush in vol, but then you had a whole bunch of people start to long it all over again. So now it's like a case of, okay, like we know that there's an increase in positioning in vol. On the day, on Friday, like that did actually continue to crush, but it then starts to give you an idea of like, okay, well, all these people have like started to increase their positioning in vol products again. Like there has to be a reason why for it type thing. And if anything, if it's not even a case of like looking to long vol in particular, because like longing vol is pretty hard, especially given like how many funds are involved in that, and they've arbed away a lot of like the edge that exists in it. It can then give you an idea of like, okay, like what type of day are we going to have, and compared to like prior days, like yesterday was a lot more janky than the days prior, so it was a decent like tailwind to like understand where price may move as a result. I think that kind of covers that section. Just quickly, another one to just go through. So if we look at Apple as one over here on the market maker model. So let's say we like looked at all the sectors and we were trying to figure out, okay, like what do we want to like take a look at? So you can type an individual ticker if you want to. You can just type in long if you want to, and then see all the most recent longs. You can then sort by date, and if you wanted to sort by a particular sector, if you wanted to, you can do that. Just hold shift and then sort, and it will sort by sectors as well. Let's say you wanted to look at the difference on percentage diff versus PNG, you could sort by that, hold shift, and it will sort by that as well. So now it's got sector plus the diff percentage filter. You wouldn't be using PNG for a long though, you'd want to look at this one instead. So let's actually just do this here, and then keep this date filter, and keep that date filter there. yeah, keep long on there, and then I want to see this. Okay, cool. So actually, I want to go for short, not that. Sorry. Yeah, there we go. All right, so you got a bunch of shorts. You want to also filter by date, and then now you can see a couple of names over here with the right date. There you go. Cool. Yeah. All right. Now you've got a bunch of tickers that you want to like take a look at. You've got their net positioning. You can go then type in the ticker itself and then take a look at those. The net deltas, Vega, where the peak strikes are. So where is major positioning? Just as a quick screen, like is spot price above peak gamma or is it at the same level? Or yeah, it is above. PNG is below as well, so that's okay. That would like kind of meet your criteria. You wouldn't even need to look at that there because you can just see this here. So like if this is negative, then you already know that that is the case. Another one that kind of like stands out here is this short vol product, but that one's neutral, so the market maker didn't have an opinion on it. But you can see like there as an example, spot price way above PG, so you can just use this column to sort by to give you that answer for you. Let's say you wanted to filter for an individual long instead, so you would do the opposite. For a long, this one's really simple. Dates already sorted for you, tickers are over here, what do you want long? If you take a look at the percentage diff PNG here, you can get that. So this time all you want to see is like the positive stuff, so I'm going to see that here. Let me filter by date a sec. Alright, then I'm going to go over, hold shift, put this down. Cool. Alright, so I've got a bunch of names over here that basically looking like a long as per market maker model. We've got Dokken over here. That one I know is like way below. Let's say I want to like look at this one in a bit more detail. Just type in Dokken. And now I can see like relative to like where positioning has been on this name in the past, like how negative is it? And right now I can see like it's in the last 60 days it's not had positioning anywhere near as negative as that day, right? Seems like people have crowded into this a bit too much at this at this juncture, though there have been situations where prices like stretched way below its peak negative in the past, which you can see over here, 21%, 21%, 24%, so on. So that'd be one that I'd be like, okay, I want to take a look at this one. I think this is one that's worthwhile, and potentially like worth a shot at as a result. Cool. I think that kind of covers everything from a market maker model perspective. So I'll be uploading this onto YouTube. If you've missed it or you want to like take another look at it again, should make things easier. Anyone got any questions at all? I wanted to ask.
Hey, Doug, I've got a question.
Yeah, sure.
About the sectors.
Yeah.
Appreciate you explaining all this and reviewing these calculations. So I look at those sectors too. I track this information as well because I think it's interesting. But my numbers don't match yours, so I don't want to know anything about the model. It's secret sauce. I'm not trying to infringe on your IP. But I'm curious, when you calculate those changes for a sector,
Yeah.
do you do any adjusting for the different like sheer magnitudes of trading in the different names, right? Like in EVs, you might as well throw everything else out because Tesla's orders of magnitude larger than everybody else. You know what I'm saying? So are you adjusting by like the float or something? Because I'm adjusting by the float. And
So it's not necessarily like an equal weighted, because like I think equal weighted is never like accurate. There are like I can also put like an equal weighted as well, so we can like review that as a general like comparison. But what I want to know is just like overall, like what's the option volume like, and how is that moving overall? Because if it's all moving and being thrown off by one like particular ticker, then that's not necessarily correct.
Right. Yeah, like the moves, like those swings in semiconductors leading up to NVIDIA earnings. Obviously, NVIDIA earnings were impacting that total, right?
Yeah. And then like the positioning like went down, and it actually like led. What I found is like by making sure that you make it relative, you then make it more what's the word I'm looking for? More relevant, right? So like everyone that I looked at like NVIDIA, there was a bunch of people that I know like who are like active traders who like were basically trying to play the opposite side, like go long NVIDIA, right? Because they were thinking, okay, like everyone's like priced in so much bad news for semis. The narrative's always going to be bad. Like they just need like a little bit of positivity to like do well. And they did get a pop, but eventually like they just still like rolled off, right? In what was like a pretty like fairly like neutral day on the market, so that like gave you an uncorrelated return.
Right. Yeah, that totally makes.
Yeah.
And then last question. I've been digging into Net Vega as an interesting piece of information. Obviously, I think that Gamma is the dominant. Gamma's going to be a dominant factor because Gamma is short-term phenomenon, and it's what market makers are obviously most concerned with.
Yeah.
But the Vega figure is very interesting to me because, at least from what I can tell, I don't know any market makers. No one from Citadel is going to take my phone call and tell me how the magic works. But my assumption is that Vega is what forces market makers to trade options, because they like can't hedge off a Vega risk by buying more shares, right? You need a volatility component, right?
Yeah.
You need some kind of protection in that way.
Yeah.
And so what I'm curious about in the market maker models, as the Vega gets negative, that's indicative the same way Gamma gets negative, right? Because like Vega's always positive unless you're selling the option.
Yeah.
Right?
Okay. Yeah.
So that means that so when I see negative Vega, that means that it's the same. It's like the analog would be you're seeing negative Gamma as well.
Yeah.
Right? It's like put dominated.
Yeah.
Okay.
Yeah.
Thanks, Doc. Appreciate it.
No worries. But yeah, you are right on that stuff. Like I do use it as an input, and I also use like Varna, Volga as well, like as inputs. Because like, and just on another thing, like it's not just that side of things that makes market makers review or not even review, like have the need to buy options. They also need to buy options because of Gamma too, right? You can't hedge off your Gamma risk by buying shares, because you need to go and hedge off gamma by buying or selling options. Like you can't hedge gamma any other way.
Sure. I understand. I understand what you're saying.
Yeah.
Like, if I want to be a purist about it, I would say, well, you just buy shares faster or sell shares faster. But I know what you mean, right?
Yeah.
That's a great way to get run over when SoftBank is buying out of the money calls and call spreads in tech for like 3 months straight in 2020.
Yeah. I
Okay.
actually think they're trying to do it again. Like with Apple this time again. Like before it was Tesla, I actually think they're trying to do it with Apple this time.
Yeah. So I obviously I look at Apple too. I take all the data. I take all the data off the market maker model every day.
Yeah.
Right.
Yeah.
I think you got to just assume there's going to be goofballs like me who like scrape that information into a spreadsheet and do some work. And the Apple one has been constantly tricky to me because I see what you're seeing, but it's not reacting the way this, like, the way I think I hypothesize other steamrolling kind of stuff has happened before. Is it just because there's too many shares? Like the float is too big in Apple, right? I that's the only thing I can come up with as to why Apple's not doing like spot up, volatility up, the way you saw in 2020 tech, post-COVID, like nuclear volatile upside stuff happening in Zoom and Tesla and all those guys. It's been a real head scratcher to me.
Yeah, well, I think it's also just a combination of like how the positioning was all set up. Whereas like back then it was all pretty much long only. Like everyone was buying calls. Puts weren't really like, I mean, well, people were buying puts, but they weren't buying them in the same way that they're buying right now, right? People are doing the opposite now. Like they're selling calls and buying puts in a lot of instances because they're all trying to like hedge for the opposite side. Okay, like now maybe things have like changed a bit more, but that in itself just like brings a completely different dynamic.
Oh yeah, absolutely, right. I've seen people, or there's a view out there, right, that like the traditional S&P machine has been running in reverse all 2022, right? Like normally it grinds higher because people buy protected puts. Vanna and Charm slowly rob the value of those puts, and market makers steadily buy back futures delta, right, and grind the S&P higher. And now all of a sudden, no longer are